U.S. producer prices are rising more than expected in June. They were up 0.2% on a month-over-month basis. When you compare it to the levels a year ago, it was up 2.6%. Here to take a deep dive into the report and really how it stacks up versus the global macro perspective, I want to bring in Daniela Costa, head of the European Capital Goods team for Goldman Sachs Global Investment Research. Daniela, it's great to talk to you. So here we have the latest PPI print here in the U.S. showing a rise here, at least more than expected in terms of those forecast numbers. I'm curious the trends that you have noticed on the inflationary front here in the U.S., how that's stacking up to the inflationary forces from a global macro perspective.
Hi, Sienna. Absolutely. So I think the trend that we have seen in Europe and in the US has actually been pretty similar in terms of directional trends. We had obviously post the pandemic a very strong rise on the producer price indexes across manufacturing, aerospace and defense, so most of the cyclical areas. And they probably peaked around sort of the end of 22. And then since then, they've been continuing to be positive year on year, but slowing down in the rate of magnitudes. And especially at the beginning of this year, both in the US and in Europe, they hit the run rate of the last 20 years on low single digits. People have been anxious about this because in terms of volume indexes, you look at the PMIs and the ISM, and they have been in contraction territory in recent months. And this has started to generate a debate globally in both sides of the developed world regarding if volumes are weak, what will happen to prices? Can we move into a more deflationary environment? And in the last 2 months, both in Europe and the US, we actually have seen things sequentially picking up again, still at much lower levels than we had in 22 and for the most part of 23, but slightly above the long run average as we see today. The one exception to this has been obviously in China, where we have not really seen this level of price inflation, and partly because the excess capacity in some of these manufacturing areas has been more prevalent and growth has lagged expectations, but it hasn't really had in the manufacturing world a contagion to the US and to Europe.
Daniela, when we talk about the recovery that we are starting to see in China, I think there's just more and more of that conversation as to how that is going to maybe feed through on a global scale. Are we starting to see any signs of that? Or I guess how big of a risk is that could, in fact, kind of reverse some of the progress that we have seen when it comes to the improvement or efforts here to tame inflation?
Yeah, I mean, as it takes on from an industrial world, actually, I think some of the weak data that we have seen, particularly in Europe, where many of the big manufacturers are importantly dependent on China, I think the worry has actually been more that if that growth is not there, what are we going to see? Are we going to see excess capacity, and will we actually move into a deflationary territory in industrials, which we haven't been for a while? So a recovery in China is probably welcomed at this point. It's also, I think, welcomed in the fact that local domestic utilization needs to increase in several sectors. So, for example, at the moment, inventories across general industrial in China, according to some of our data, are still 20% above normal. So you're still in a situation where the risks towards domestic downside are bigger. And if we do see that capacity getting used in China, there will also be less worries that emerge of competition from Chinese companies elsewhere. So that's where I'll put it.
So, Daniela, I'm curious just about the consumer sentiment surrounding inflation globally. Obviously, in the U.S., we got consumer sentiment data in this morning showing that consumers are feeling negatively about the inflation picture, that data coming in softer than anticipated. Where are you seeing consumers around the world the happiest with their central bank's handling of inflation?
Yeah, I mean, I sit on the industrial side, so I think harder for me to comment directly on the consumer. But what I would say, sort of, we see in the picture is, I mean, in terms of actually the data points that we track in consumer, they have been sort of slightly off the bottoms on our global data maps. But I think to the extent that this links with what we're seeing, the different trends, as you mentioned, that we are seeing in sort of a bit on the CPI and the PPI. In terms of industrials, the companies that sit in has those intermediaries, they tend to have pretty good pricing power. If you look back up to the the last 20 years, it was really only in 2009 that we have seen these industrial producer prices across manufacturing being significantly negative. Since then, I guess there's a bit of raw materials have recovered, so these companies need to pass them through. Labor costs are still going up as well, and demand is weaker, but not in a recessionary territory. So they're having to pass these things through, and obviously to some extent this will probably continue to impact consumers.
All right, Daniela, thank you so much. We really appreciate you joining us this morning. That was Daniela Costa, head of the European Capital Goods team for Goldman Sachs Global Investment Research.